What is up, YouTube? Welcome back to another video. Today I am interviewing a good buddy of mine who's also a mortgage lender. We're talking about the market, the rates, what's going on. So I hope you enjoy it. I hope you get a lot of value. Just a quick, hey, what's going on? What are the rates doing? How's this going to affect the market? That's what we're doing. Let's hit it. What's going on, guys? This is Sam Collier, lender with McLean Mortgage. I've actually done 2 personal loans with Sam and done many for clients of mine. So excited to chat with him about, we've got some changes going on in the lending world. So we're going to chat about rates, what that's going to do to the market, all that fun stuff. So before we do that, tell me a little about you. Give us an introduction on.
Yeah, I'm Sam. I'm a loan officer here in Greensboro. I've been in the mortgage world going on 5 years now, helping people buy and refinance primary residences, second homes, and investment properties. So sweet. I got some notes here with me to make sure I touch on all the points we wanted to hit.
Sweet. Yeah, so that's the first question that everybody wants to know, obviously, what's going to happen with the rates. So let's talk about that first.
Yeah, so everyone has heard that the Federal Reserve has announced a series of interest rate increases. It's a bit of a buzzword now, but it's important that when you're talking about the Fed that we make a distinction between the Fed funds rate and mortgage rates because they are not the same thing. So the Fed funds rate is more geared towards short-term lending, so think auto loans, student loans, credit cards. They control that rate directly, fluctuates. Mortgage rates are affected by the buying and selling of mortgage-backed securities. We follow the 10-year Treasury bond. So the Federal Reserve does have the ability to affect mortgage rates indirectly, but it's not just by waving a magic wand and raising them. It's by the buying and selling of treasury bonds. So now it just so happens that as the Fed has announced that the Fed funds rate is going to increase, mortgage rates have also increased, but the two are not necessarily correlated.
Gotcha. So does that mean basically the government doesn't necessarily get to decide the mortgage rates? It's kind of decided by the market?
Correct. Correct. That is true. You wanted to know, rates are going to go up, how far, how often. No one knows, right? We don't have a crystal ball. My personal opinion, I do think they will continue to increase, maybe at a slower rate. But for the foreseeable future, I'm always recommending people lock now. If you lock now and rates go up, you got a good deal. If you lock now and they go down, you can refinance later. So you're not necessarily stuck. Even with increasing rates, it's also important to remember that they are historically low. People in the past have still bought and sold houses when rates were in the double digits. We're experiencing a little bit of recency bias over the last year or two with them being in the 2s and 3s. We've been spoiled a little bit, but there's nothing to be worried about. I still think it's a great time to buy real estate.
Yeah. No, I've been spoiled because as long as I've been around, they've been at least under 5, so you see a 5 and you're like, oh gosh, what's going on?
Yeah. A little bit of sticker shock.
Let's talk about where they're at right now, because I don't think we did that to start with. So where are we at right now with the rates as a percentage?
Yeah, so there's a lot of factors that go into a rate. Credit score, down payment, loan amount, housing type, loan type. How long are you locking for? If it's new construction, you might need a 3 to 6 month lock term. If it's just an existing home, maybe you're looking at 30 to 60 days. General rule of thumb, high 4s, low 5s. It just depends on your credentials, but changes daily, it seems like. So definitely get all your ducks in a row so when you find that house, you're ready to lock.
So say you get 700 credit score, looking at around just under 5 is what you're saying?
That sounds about right, yeah.
About a point difference from where we were at.
Yeah.
5 months ago.
Not enough to deter me.
Right, yeah. Well, I forgot that. So what do you think this is going to do to the market? On the agent side, I've seen some of my buyers obviously getting kicked out of pre-approvals. What do you think that's going to do to the home sales?
Yeah, so when you get pre-approved, you're getting approved for a maximum allowable mortgage payment, and your interest rate has a big effect on that. So if rates increase, the amount you can get approved for is obviously going to go down some. tends to hurt people the most who are at the bottom, right on that cusp of being able to get approved or not. So all else being equal, if you had someone a few months ago when rates were in the threes that could go up to 200,000, full point increase, they probably can't go that high anymore. So you will see some people get priced out of the market. You'll see some people at the top have to readjust, the range they're looking in. I don't think it's going to have a huge impact on demand. I think that the supply is just so much outlasted by the demand that you're still going to see multiple offer situations on most of your homes. So now you can offset that, right? So if before you had a certain mortgage payment that you had to stay around, if rates go up, you can offset that increase with a larger down payment. But if you don't have it, there's not a whole lot you can do. It's just math at that point. So more important now than ever to save your money and put yourself in a strong financial position. So when the right home comes along, you're ready to pull the trigger.
Yeah, I'm expecting. Well, it's already been crazy the past couple listings that I've had here at the first of the year. I've had multiple offers. Even the one that sold last week, the rates had already come up at that point, and still multiple offers. It was under 200,000. So, so I'm not seeing anything crazy happening with that other than some of these lower end buyers getting knocked out. So, I think it's still good news for sellers, and there's still not enough houses for everybody to go around. So,
It's true.
Yeah.
This is true.
So are there any new changes that we're going to see in the investment loans? I know I just did a refinance and had to buy down the rate a little bit. Talk to us about investment loans. A lot of people buying second homes right now because the rates were so low, buying Airbnbs and stuff like that. How are those people being affected?
Yeah, so the Federal Housing Finance Agency, FHFA, not to be confused with FHA, they are kind of a watchdog that oversees and regulates Fannie Mae and Freddie Mac, the big mortgage regulatory institutions, and one of the roles that they play is pricing for investors. And they have added additional what are called loan level price adjustments, which you can think of as additional fees to those occupancy types. So if you're buying a primary residence right now, you have a way better rate and way better rate pricing than if you're buying a second home or investment property. And the FHFA's mission, one of their big goals is to expand home ownership to as wide range as possible. Well, right now, investors, people who are buying rental properties, people who are buying second homes, stereotypically speaking, those are the people with all the money. They have the cash and the liquidity to go out and buy these extra homes. So in an effort to quell some of that and give first-time home buyers a better shot, the loan level price adjustments have been added to the second home and investor occupancy types. That gets passed off to the consumer in the form of higher rates or larger down payment requirements or having to pay discount points. So they're almost disincentivizing people from doing that, making it really expensive.
So can we call out all the agents on Facebook groups that are getting mad about investors buying up all this stuff? Be like, look, the government's not making it any easier on them.
So it depends on what kind of investor you're talking about. If you're talking about an investment group or a hedge fund or an asset manager,
using private money either way.
They're using private money.
I just wanted to
or they're paying cash, but go ahead and start it. If you're paying cash, you don't care about rates.
So basically, the sky is not falling. Rates are gonna go up, but eventually we could see them go back down. At that point, you can refinance or just hold on to it. It's not going to be a significant increase. I experienced the rate increase myself, and it really only changed it like $80.
Yeah, well, here's the thing, man. Rates could be double digits, but at the end of the day, it's still better than renting. So you're either building equity for yourself or someone else.
And the higher the interest rates, the more tax deduction you get.
There you go.
think about it like that.
There you go.
All right. Anything else you want to bring up while we're here? Any sales pitches for us or anything like that?
Best time to buy real estate was yesterday.
That's
Second
right.
best time is today. So.
Yeah, I like that.
Yes, sir.
Maybe that would be my thumbnail here.
There you go.
Well, cool. Well, I appreciate it, Sam.
Anytime.
Peace.